Hello, and welcome to another update video about Ethereum. So Ethereum is currently still holding above the main support area here on the daily time frame, but I can tell you below 1800, yeah, it's going to get super tricky for Ethereum to recover in a still unfolding bullish market. I mean, there will still be ways, for Ethereum to do it, but the question is, would this be a highly likely scenario? Let's talk about the different scenarios that are possible here on the Ethereum chart. For now, it is quite clear, I think, that this move to the upside is not an impulse. Anyway, we talked about that, which means we cannot trust it. Okay, that's the thing. I did say I give the bulls still the chance here for one more high, but it's getting less and less likely. A major warning was the break out of the price channel. I think we can remove that channel now. Still, though, it is still a valid... It's still a valid diagonal pattern to the upside. I think that is important to understand. But, and that's also very important, without any confirmed low in place, right? So we want to take a look at possible support areas here on the larger time frame. For an even larger time frame point of view, check out my latest Ethereum video on the MCO Global channel, where I really talk about possible bear market scenarios in detail and everything. It goes a bit beyond the scope of this particular video. I will link it somewhere. You should see it on the screen, and I'll link the MCO Global channel in the video description as well. That's our main channel, more in-depth analysis and so on, where, I discussed, what happens if this wave 4 is still unfolding and all sorts of things. But for now, let's just talk about relevant scenarios here and support levels. I think the idea that a wave 4 actually bottomed in August, I think that's, we throw that out of the window. So it is at the very least, let me, let's do that. So at the very least, the wave 4 is still unfolding, and I'll shift all of that to the right so we can just tidy that up a little bit here, because this is also a little bit about learning and how the structures develop and everything, and so let's do it together. This wave 4 here could easily still be unfolding as an ABC flat structure. It is a wave 4 in a diagonal, so the 61.8 retracement at around 1800 is normally the last level we want to get. We want to see a price test in such a scenario. It's not an invalidation point, though. That's very important to understand. This is not an invalidation point. So technically, if you know about Elliott wave rules, then you know that the price should not break below 1790 in that scenario. It can, however. The formal invalidation point is the low of wave 2, around $1,070. So that's just Elliott wave rules. I'm not making these rules, but I normally don't consider it to be anymore a wave 4 if it breaks and sustains below 1790. So again, I still want to give the bulls the chance. So I'm still tracking relevant support levels, but it's very important that we don't have any confirmed low in place. So I cannot, I cannot take any aggressive long positions, right? Because we're in sell-off mode. And does it make sense to maybe start to buy slowly? I don't do it for Ethereum. I can only tell you what I'm doing, because I don't trust this chart. I do it for Bitcoin because I see Bitcoin as a much higher quality asset. For Ethereum, and it's also been outperformed by Bitcoin, right? So yeah, I just don't see, it's just not attractive. And it's not been attractive throughout the entire cycle, unfortunately. And I'm sorry, I wish it was different. So this could still be a larger 4. But below 1790, we need a different scenario. What happens below 1790? Now, is there a different scenario? There is potentially, but it is questionable. So I'm just talking about bullish point of view, what would be other support areas? It's nothing I would trust, okay? That's the important thing. So if you now think, oh, now he's putting another scenario onto the chart, well, it's it's nothing I would trust. That's very important to understand. So it's about watching these levels, just knowing where levels are. It is entirely possible that we're getting a dip in a larger B wave. I will try to explain. These are simply levels to watch. So what if it goes below 1790? The next support levels would be 1436 to 1250. And, you know, could it still be a wave 4? It could be, but it probably would rather be something like a B wave. So I will try to explain that. Let's use a yellow scenario for that. And in this scenario, we could say, hey, maybe we are still in the third wave. There's nothing wrong with that. It's a valid wave count. That is, however, a hopium count. And I know a lot of you will like that, but it's not anything that you can trust, okay? Couldn't say it more clearly. Still something to watch for, absolutely. So it might mean that, hey, you know, we never saw... Because the problem with the white count is, also one reason why I don't trust white as well, is because if the fifth wave plays out from here, to reach all-time highs, it would need to be a very extended fifth wave. So it's already problematic. So the yellow count as a wider ABC structure would kind of work quite well. But that being said, I would approach it from a mindset that we are in a downtrend and the price would need to prove that this is actually playing out. Okay, so we've got a support area there. Why do I include the 88.7 Fib level? Because B waves tend to be deep. Yeah, so I would not expect. I would call that weak support. Let's call it weak support. Weak support. See, this is not a weak support area. The price reacted to it a few times, especially here in August. Yeah. September, it's been holding above it. We're now coming down to it again. It's quite a stable element on this chart, this wave 4 support. But for a B wave, I just wouldn't trust it. Okay, so that means if it just keeps dropping, the focus would be on 1790. Then we can shift the focus to 1430 and 1250. But with a mindset that we might already be in the bear market. Or we might have never left the bear market. I mean, if you look at the structure, we might have never left the bear market, really. So that would then take us to a scenario where, you know, is this wave 4 still unfolding? Probably. I mean, the probabilities that this larger wave 4 is still unfolding, that will just increase should we break below 1790. And I think this, I hope this gives you a good overview of what's currently likely, the risk here. And for now, the trend is down anyway. So I am watching this area very closely, but Ethereum has been weak throughout the cycle, and it's not an impulse to the upside. So I want to really see a first upside impulse. I mentioned that yesterday. I need to see some kind of an upside impulse from here, or we are probably going to test the 1790 level. We'll see. The price is currently pressing that 50% retracement. Next is 1790. Now let's take a look at the smaller time frame, but the smaller time frame isn't so important at the moment in times of high volatility. So here, and you know what we'll do? We will delete all that. And I will just copy here the adjusted larger time frame stuff to the smaller time frame. And we're just labeling the smaller time frame together. So again, this could be a C wave down, but you know, it doesn't make any sense to add really a microstructure here. Not really, because see, until we get a first upside impulse, there isn't really much to do here. So 1, 2, 3. This would have to be 4, and we're now in 5. I mean, it's possible. You know, it could turn around at any point. I mean, the market is oversold. It's just about understanding what are the levels that need to be crossed. I see this decline as an ending diagonal. So we've got 3 waves in 1 very clearly, 3 waves in 2, 3 waves in 3. I mean, I think that everybody can see that. That's why the decline is not impulsive, which is why I'm still inclined to give the bulls the benefit of the doubt. But maybe that is just a characteristic of this cycle, that the declines just look corrective, but they turn out to be diagonals. So it would be that. Which also means we could be in the late stages. You know, we could be... So it might just be a marginally lower low, but without any confirmed low, difficult to say. So to really believe we're going to get back into an uptrend, I mean, minimally above that last high, 2,880, I'd say. That is the level that needs to be broken. Oh, it's this area, really. 2009, 2,930, 2,880 to 2,930 is these are two signal levels that I want broken. There's a bit of an area of resistance there, roughly like that. Yeah, bit higher though. Yeah, like that. Okay, didn't really. Okay, so for now, this is therefore a still active downtrend. Zooming in any further, I mean, there's not much really. Microstructure isn't terribly clear. I don't really want to try to label this. I mean, because then people think, it's supposed to be predictive, which it isn't, of course. The way to label it, it already starts up here that this is unclear. Is this really a 1-2? Because on some exchanges, it's not there. And then we can say, okay, is this a 3, 4? So yeah, I mean, this is like the hopium count where we say, hey, maybe the low is in, but without a confirmed reversal. I mean, at least then above this level, this would be a weak signal level, I would say, 2,381. Without a break above that level, there's absolutely zero evidence a low of sorts is in place. So yeah, that should give you a good overview of what Ethereum is doing at the moment. Hope that helps. Make sure that you subscribe, hit the like button, leave a comment, and also for more in-depth analysis, check out the MCO Global channel. I'll put the link in the description. This is a channel where I covered yesterday also the Nasdaq. Nasdaq could have topped already. Also here, the risk on the macro level is very, very high. I covered 3 altcoins that could still reach new all-time highs. That's still valid. But I also mentioned to you the key risk levels there, stop out levels potentially. So there's lots of different stuff on here. I talked about Tesla, PayPal, tutorials, and so on. So thank you very much. Bye-bye.